Very good evening, folks, and welcome to tonight's isolation session. Usual format, going over the market maker's pattern, picking out harmonics, and looking for setups for the rest of the week. So, what I wanted to show, well, I mean, you can do it yourself. If you go onto forexfactory.com, it's a really good site just to give you some overviews of important news. Done in a rag color system, red, amber, green. Sorry, not green, red and amber ultimately. So red's obviously very important. If you have a look at today, for example, we've had high impact news in Australia, high impact news in Switzerland, UK, Europe, and the US across the board. So that was today. Yesterday was the same thing with American inflation. We've had the UK interest rate setting today. We've had European interest rate. Absolutely impossible backdrop to trade in. Nevertheless, we must try. So before I start, trading is risky. Obviously, CFD, spread bets, options, and futures, things that you use to get exposure to the FX market are incredibly risky tools in themselves. Please be aware that these signals as well, you cannot ultimately claim compensation for any losses, and you can't have your case listened to by the ombudsman because the signals aren't a personal recommendation to you. They are simply information, and it's down to you to act upon them. Finally, Synergy is authorized and regulated by the FCA to deliver this service. So it's been a slow month. It's been a month where, because of the news and the backdrop, we've had to scale out of trades, cut trades, haven't managed to run too much. I mean, in the premium group, it's been okay because we have more variety. We can look at some of the harmonic patterns, and we've done well over those to supplement the rest of the portfolio. But yeah, it's been particularly tough. And an example today, which was a bit of a slap in the face, but a perfectly acceptable slap in the face, considering the backdrop of market volatility, breaking high impact economic data. Sometimes you have to think about protecting your capital, even though the opportunity presents itself. And that's exactly what we did. So without further ado, let's move on. So first up, so we had today that affected every currency, and we will start on this guy here. So we can call this a missed opportunity. This is one that we scaled out of or chickened out of, whichever you want to call it. It doesn't matter. We didn't enjoy the fruits of the labor, but we enjoyed being able to pick up on the breadcrumbs of the market maker, because the market maker leaves very subtle breadcrumbs, and that's how we're able to get on the back of these moves. Sometimes, though, there's a lot of external pressures, psychology, discipline that clutters the brain and makes you come out or do the right thing. It's very difficult. Anyway, let's reassess why we like this. So AUD CAD, we even mentioned it on last night's video. We spoke about 1, 2, market works in 3 and expecting a third push to the 800. This will also create the first consolidation zone, and we'll see how the market makers construct that. They may make it a chop, they may make it a big trap in the direction of the trend, then a false move against, and then the real. We shall wait and see. Ultimately, what we did see, though, was a hammering of hits to the 200 EMA, which is the targeted entry on the entire time frame, which you should see here. That should be in white. And so we have an absolute prime example. Look at the double bottom, or the W, V, V, and then we're waiting for an M at the top, and this is just one level up. So this is level 1 rise. We were in this, kind of bottled it, call it what you want. We ultimately saved ourselves from a potentially bad trade. And there was a lot of volatility with the news, etc. But yeah, it's good to look back, see that what we saw was valid. It acts as like a positive feedback loop. So what can we see here now? We've completed for sure a day of rise and then a rise drop. So there's not too much on that right now, more to give. What we do have, though, was the 3 weeks of rise, and then we've done a This is sort of like a trapping at the end of the week, false move, and then the real unraveling. So it's a really nice move away. Where did we mess around with it? We were getting in along here, came out on this. This is a breaking news, came back to the low, and then picked up. Very difficult to have gotten in. I can't really see an entry myself, so we'll pass on it for now. GBP AUD, as you can see, we're in the second zone of consolidation. Prices within these two yellow lines at the moment, which is the second zone of consolidation on the way up. We've done a huge sort of railway track down and up. Targeted entry is trades off the 50 EMA, so we need to wait for the 50 EMA to get above that. But at the moment, being held up by the 200, I don't really have anything on. It moves a lot. The ADR's high pass. CAD CHF hammering out that bottom. We spoke about this yesterday, the huge ABCD pattern. Huge ABCD pattern, which is a multi-year hold completed. Notice the market maker pattern on the way up, 2 levels, and on the way down, 2 levels, and the rest is lower lows and lower highs. Beautiful ABCD to a low, 3 drives to a low. Everything's screaming this is a big, massive low in this particular cycle, and we do expect higher prices. We are long it, trades still open and valid. We're creating this sort of inverse head and shoulders at the moment. And that's it. GBP JPY, I'm not really touching it. It's in a peak formation or threatening. We pushed up 3 times, higher highs and higher lows, and that last higher lows being tested. They let them test and break without pass. Euro GBP, so we're in this. Level 1, level 2. We saw a clear W pattern below the level 2 consolidation. We've seen a series of higher highs and higher lows from that W. Price came all the way back to create a higher low here. And if we look in a bit more detail, what we saw was we have straight red candles, which we know is going to act as, petrol to the upside. We've also had a day of rise, second day of rise, and then we've had a rise drop. So we know tomorrow, probability wise, we're going to have another aggressive rise on the way up. So this is a variation. What else can I pick out from it? I can't really pick too much else apart from this is a higher low coming out of the low of level 2 consolidation, having had 3 weeks of drop previously. Trading in line with the trend. You can't ask for more. So we'll see how that goes. Euro USD, beast mode. There's no coincidences in any of this. Trades off the 200 EMA in level 1. That's the rules. We've made a big break and retest off level 1. Notice the candles, the green candle, there's 3 to a high. This high is going to be quite tough to break if we have a look back at. So we had 3 weeks of rise, 1, 2, rise, drop, and then we finally been given our rise. Much like on the previous Euro GBP, the rise, drop. Look, rise, drop, and then given the rise. Super trade, couldn't get in, news driven, but looking really good, looking smart. Let me just delete this. There's a horrible cold going around. Got a couple of young kids and they bring back loads of it from school. So excuse me for any hoarseness. Is there anything else worth noting on here? The trend is up, ultimately. We're looking for longs off the 200 EMA. It was kind of given here. Very difficult trade to get involved with. Not one, certainly my expertise. I can't see any entry here. But what I can see on closer inspection is this is a day of rise. Then we had another day of rise and it gave us a third. Now, if I'm looking at pushes after a break of structure, I can see that here. The previous break of previous structure to be broken was here. We broke it with a 1, 2. And then if we zoom in on that 1, 2, now this is serious source, guys. This is stuff to make note of, because I doubt you'll see anyone telling you how to enter trades or what to look for on YouTube. But what you ultimately need to look for is a break, 2 consecutive breaks, a pullback, and then an internal 1, 2, and then boom. So That's all you need to do. But then you need the context of where you are in the pattern. You need to know you're in where you are in such location, etc., etc. It's powerful stuff. Looks easy, but it's bloody hard. Okay, Euro JPY. So this guy's in a peak formation. We can see the pattern playing out here. Level 1 on the 800, level 2 above the 800, and then higher highs and higher lows till we reach a peak. Massively extended level 3. That means that level 1 could be huge, but I doubt level 3 on the way down is going to be particularly large. We're looking for level 1 to be complete around the 800, and at the moment we're looking at level 1 drop. Rules for level 1 are trades off the 50 EMA. So we're waiting for a retracement higher. Let me just get my shape tool thing out. So we're looking for trades back into here for continuations. 5 and a 15 across the 50. That's a signal of level 1 drop. It is one that we could start to consider. Let me just see on the 30 minutes what it's given us. So I'd say that this is a drop because we started here, ended here. This is another drop, started here, ended here, and then we got the drop rise. So I do expect a retest of the low. Passed, but I'll leave the window open for interest. GBP CHF, we spoke about it. This is level 1 drop, ABCD. Aggressive move higher, chopping around. I was looking for an entry on it because it was news. There's no chance. You can't get what you want on news. You can risk it, and I did risk it, and it nearly kicked me in the teeth with a losing trade, and I would have been devastated, obviously, for not abiding by my discipline and stuff like this. But at least this time we waited for the news, and it's still terribly volatile. Anyway, this is an absolute stunning example. Again, notice the 3 consecutive lows. 1, 2, 3, double bottom. Notice this break of structure here. That creates the start of the count, so that's the change of character. Then we have 1, 2, 3 to the high. In terms of getting in, you could get in here if you know you've had 1, 2, and it's going to give you a third. Yeah, that's all I have on it at the moment. We're trading between this high and this low. We need to see a break in this structure for continuation. It's a DJPY. Not really looking at it much more than this. I'm expecting it to explode higher. Ultimately, I can see the consolidation, level 1, level 2, and I expect it to go absolutely parabolic off the screen. But trying to get into it is another kettle of fish. So at the minute we have a week of drop, a second week of drop it's looking like, and it's going to give us a third, and that's also looking to me like an ABCD pattern in the making. A, B, C, D. So it's looking like it wants to come off a little bit more before, but let's pass. AUD USD. So again, let's have a look where we are. So this is a pattern that we expect price to flow lower. We have had the Fed Reserve come out speaking about interest rate policy, and markets are pricing for an interest rate cut next year of 1%. So that's obviously super dovish for markets. It's not in line with this pattern, that sort of initial rhetoric, and it's when the economic data actually comes out to cement that view. But this is the pattern. It can't be argued with. It can't be tampered with. This is the flow of the market. Markets work in threes. It seems to be some sort of divine number to it. Look into the number 3. It's just a very powerful old ratio. You very much often hear 3 steps forward, 2 steps back. That is Elliott wave. Ultimately, if you have a look at the Elliott wave diagram, you've got 1, 2, 3, 4, 5, which is 3 waves up, and then A, B, C down. So 5 waves up, 3 waves down, 3 moves up, 2 waves down. That's what we have here. So we've got 1, 2, and each time you can notice we've got a consolidation phase, and we have a trend. Here's the trend. Here's the trend. Here's the trend. So we've got a trend starting in consolidation, and we expect this blue move to play out here, and then some. So what we can definitely say now is that we've completed this harmonic move up, and prices flirting around closing. Here we've had push 1, push 2, maybe a push 3 all the way up to here to who knows. I mean, until this thing turns around and takes out this swing low, we can't really look at it. pass for now. Gold, rampant. So this guy is targeted entry was hit, high, high, low, much like AUD CAD. And there was another one, Euro USD, plumb off the EMAs. Again, difficult trades because of the news at the moment. Economic data and policy is, it's really tough to trade. And these things happen once a month, but they do dominate for a good week afterwards. The issue also is that Christmas markets, thinner volume, it's less opportunity for us. But you have to play what you can when you can. It's the high low, targeted entry, looking really good, level 1, level 2. Euro NZD, I'm actively stalking this, but this looks like another push to the high, which is fair play. Obviously pretty bullish. So we're looking like we're starting to do something here. Well, here's 1, here's 2, and here I can see a 1, 2. So I think a close above here does open the door higher. It really does. I'm going to keep that open. I quite like it. I do like this. Week of drop, second week of drop, third week of drop. So we've had 3 drops, 3 weeks of drop, and we've hammered the bottom 3 or 4 times. Now let's remind ourselves where we are. We sort of held up this harmonic blue line here, and we're in the middle of level 2 consolidation, expecting higher prices. Typically, we should be waiting for a trade off the targeted entry, which is the, wow, doesn't need to work anymore, the control function. That's annoying. Okay. Well, I'll just move that one. I can copy it. So targeted entry, it's still quite early, potentially. What have we had so far? Any sequence? No sequence, but for sure, this is a hot prospect. It really is an absolutely enticing one. Really enticing. I mean, for me, it's all about this. Yeah, it's here and then here. But most important to me is the fact that I can just see that and that, and it feels incomplete. It feels like we need another shoot higher. Look here, you got 1, 2, 3. So far we've made 2 successive higher highs. 1, 2. Then you've got 1, 2. Close above here. It's got to be above the wick. That would open up the ceiling. ADCHF, great trade. 100 pips. And yeah, it was a good trade for the premium group off this Gartley AX A, B, C, D, and they took all of this. It was a proper good trade, but I still believe I'm not convinced about whether this has got more to come or not. This is level 1, this is level 2, and then we've got push 1, push 2, should be push 3, all the way down to the previous peak, which is down here. Remains to be seen. Just the way price is behaving around this high, it's just lower highs at the minute. Lower highs inducing traders, end of year stuff, flashing up, making all the indicators light up, getting people excited. Interesting but pass. Euro AUD. So we've completed the ABCD here. A, B, C, D. I missed it completely. I was asleep. Sorry about that. But we so far had also a push 1, push 2, which is what taking out this low. However, the big picture, this is in line with the market makers trend higher. There's level 1, there's level 2. Notice the red harmonic nearly being complete. Price got close. Is it over yet? Not sure. Certainly no confirmation here apart from sideways moves. And week of drop, second week of drop. Sort of nearly, but then we hit it this week. 3 candles up, you can't trade that fast. This is one that we missed. That again, because of news, it restricts us from getting involved. Euro CHF making that move, a potential iconic move from the lows. If you have a look at the entire market makers pattern, you've got level one, level two, peak formation, double bottom, lower lows and lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, equal lows, 3 hits to the low. So it is saying that there's something going on here. There is also A, B, C, D, A, B, C, D. Did want to get involved, just didn't arrange itself properly. So if we look at it here, excuse me. So we had a lower low, lower high, lower low, lower high, higher low. And then we took this out. We took it out of a 1, 2. And then there was a 3 above. So I was thinking about getting involved. So we had the 1, we had the 2, then we had high, high, higher low, higher, high, higher low. We didn't, these wicks were too long to be confident. If we got a close here, would we take out the wick plus the 800? So it wasn't the best candidate, but it's given us 2 days of rise in line with the market maker for tomorrow. That's what we want. GBP USD, rocket ship, 2 days of rise. If we have a look where we are, making higher highs and higher lows in level 1 consolidation, expecting higher prices. Level 1, level 2, expect higher prices. Hasn't quite come down to the targeted entry. Looks good, looks strong. 2 days of rise. I can see push 1, push 2. This is something I want to get involved with as well for tomorrow. 2 days of rise. 2 2DR. USD JPY completed the harmonic. That means a massive pattern potentially. This has got so much more to come down. Level 1, level 2 peak. Just passing this, just chop city. Moving through the last remaining. USD CHF having a look like it wants to take out this low, or at least double test it. See the market makers pattern on the way down, level 1, level 2, and on the way up, level 1, level 2. So we know that we're in the peak. Trade market makers trade it both ways. Expect the low to be hit again. Pass for now. Into DUSD, really nice. We took this, sent this as a ABCD in the premium group as well, and they had a massive move away. It's a little bit difficult to analyze this one. We have level 1, level 2 peak, level 1 on the way up, and we also had the AB equals CD, which gave us, let's look at it a bit closer. So then we had the harmonic move up, which is completed. So we know price is tired here. We need to take out a previous high for that to keep pushing on. But what we did see was, and what we are seeing as a continuation trade here is something really quite nice. So we can see a push 1, a push 2. I'm looking to be long this tomorrow, so it's going to be another entry. We'll wait till then. Okay, AUD JPY is a peak formation, level 1, level 2 peak formation pass. Euro CAD, this is the one that I sent today and bottled it, or was just sensible. Either way, I've had too much experience of getting hurt by the market. So yeah, try to keep losses low, trades carefully selected. So what we can see here is this is level 1 consolidation, because we can see the previous pattern on the way down, and what comes down must go up. So we're seeing the reflection of that here. Obviously this move, and now we have this move. Obviously it's larger, so it's signifying that there's going to be a bigger upward move. We can notice the harmonics have completed, give us a nice opportunity. The entry was off the 200 EMA. Now we didn't take it off that EMA because that's hero trade stuff, and that's what the naive do. So what we can see is a week of drop, second week of drop, third week of drop. Bingo, that's perfect. We then saw this change of character, and then we saw 1, and then we had this close above, which we took, and it gave us these pips. But then because the volatility was a little bit too much for even me at the time, I just thought it was going to be a losing trade, so I just called it in when we were up 7, 6, 5, whatever it was, whatever you can get away with at the time. We had some real nasty candles. Now let me just remind myself of which one spooked me. I think it was this one here that spooked me, and the tail, I think, put us down like 25 pips within a matter of a few moments. Obviously, the news is at 1:30. This is aggressive stuff. Aggressive, but we did see the pattern. Saw the pattern. That's what the skill is. That is the skill. So we saw that last lower high, we took it out. We took it out, and then we took it out again. And then you can see the internal lower lows, lower highs. We took it out here, and then that close is where the killer instinct comes in. But you end up picking that up. I can show you this now, but you are not able to go and find that on the chart now. I'll test you. You will not be able to find that on the chart. If you do, I owe you a drink and I'll give you some free teaching, but you will not be able to find that. USD CAD. What have we got? It looks like it wants to do a bit of a depth charge back to the lows, but the pattern's beautiful, sweet, level 1, level 2. Notice the blue harmonics. Middle of the range. Looks like we want to come back down here and test this low, make a higher low. I'm cool with that. Let it do what it wants to do. There's no sequence. What we can start to see, we did see harmonics. Look at the harmonics holding up price here. Here to a degree, we haven't overlaid. Let's overlay this guy. Take him for a quick walk. You can see that that price is, it's on the charts. You can't deny that. And then we've got another one here. So just by simply pulling the harmonics about, you can get an idea that this is the vibration of this particular market. Yeah, kind of. Anyhow, nothing for us on that pass. CHF JPY reach for the stars pass, 3 years of rise, expecting this to give us a double top. It's not even worth looking at. AED enter D recovery, lower low, lower high, lower low, lower high. And now it's making higher highs and higher lows to confuse you even more. Why aren't we confused? Because we understand where we are in the pattern compared to the previous uptrend. We're expecting the market makers pattern to play out lower now. This is a large level 1 consolidation. Getting lower prices. This was just a Gartley X ABCD pass. CAD JPY pass as well. So there you have it, ladies and gents. I hope you find this as enjoyable as I do. It's a real passion. Let me know if you'd like to learn it, and wish you all the best. Thanks.